And now I invite Kiran Chandra Kalluri, partner, Dallas Ventures, to take over for the first panel discussion.
Hi, Heather.
How many people on stage, Andrew?
1 plus 3.
1 plus 3. Okay.
Huh? Yeah, yeah. 3 panels. No, I know. So it is Madhavi, Rathnakar, and Chirag.
You prefer to be in the middle or at the
No,
edge?
no.
Edge.
Name mark. Yeah, yeah. Just get started. May I request the fellow panelists, Mr. Rathnakar Samavedam from Hyderabad Angels, Mr. Chirag Thakker, Managing Partner, Midda Ventures, and Madhavi Vuppalapati, Partner from Hoshira Capital, to come onto the dais so that we can get going with the panel discussion. Hey, good afternoon, everyone. I know probably it's almost on lunchtime, but we'll promise to make it exciting. If you all settle down, we'll quickly start, and we have a very exciting topic today as to where is capital flowing over the next 1 decade. For some of you who are new to investing, some of the aspiring entrepreneurs, it's it's a fact that venture capital is one of the newer industries. Venture capital and private equity has just less than about a decade and a half of history in India in its real form. Of course, we had the first set of venture capital firms setting up shop almost all 20, 25 years back. But for the first 15 years, they have been very far and few. And over the last 10 to 12 years, it is. Yeah.
May I please request everybody to settle down? Can I please request everybody to settle down?
And today we have three eminent panelists. I am Kiran Kalluri, partner Dallas Venture Capital. And with me are Chirag Thakker, who's the managing partner for Madhavi Ventures. Chirag has been in the venture world and in the world of investment for now close to about a decade and a half or more than that. They come in early stage, and he has worked across both angel network platforms and also family offices. And another eminent panelist we have today is Rathnakar Samavedam. Rathnakar again has more than a decade and a half of investment experience. And today he is the investment director with the Hyderabad Angels Fund. So again, he has the experience of working both with angels and AF funds. And we also have Madhavi Vuppalapati, who you all know is the vice chairperson of TiECON Vizag. But she again comes from a very eminent background, having worked in technology, manufacturing, significantly operator-led background. Today she is into investing, and that's across multi-stage investing. She is currently the partner with Hoshira Capital. And as I was starting off, if you see over the last 12 to 13 years, we can probably break the India startup investment cycles into 3 or 4 different cycles. The first cycle, which started in 2012 and probably 2012 to 2016, was riding on the internet adoption, internet wave. It was significant investments into the consumer technology. Then the UPI stack came on, and there was a burst of financial adoption in India, which sort of drove the fintech and SaaS cycle started just about in 2016 and continued till 2020, and it's still continuing. It started building up from 2016 onwards. And in between, there was a burst of edtech and quick commerce. You have seen the likes of Blinkit, Zepto, the models which are not seen in the world, being funded and quickly growing, which in a way, again, is bordering consumer tech. And then 2023 onwards, we have started hearing significantly about deep tech, research-based technology startups where there's a lot of investment flowing. Now, that said, there has also been a significant difference. If you just take the numbers of 2025, India's VC investments are about 24-25 billion, while the global investments are close to about 400 billion. But apart from the numbers, India is probably about 5% of the overall global VC ecosystem. A big difference is in India, only about 8 to 10% of the money has started flowing into the deep tech AI ecosystem, while globally almost all about 50% of the investments, almost all 220 billion, is into deep tech and AI. So if you look at it, that hardly 1% of the larger global investments into deep tech and AI is from India. Just about 2% of that entire amount is, or 2 billion, 1% of that entire amount is coming in, is being invested in India. So my first question, or before we go there,
I would request Chirag, Rathnakar and Madhavi to quickly talk about their investment fund and investment strategy for a minute so that it can set the context.
Thanks for setting up, Kiran. So, I'm from Midda Ventures. We are basically a family office and we invest into the early stage startups and we are sector agnostic. Midda Ventures as a family office is new to the whole ecosystem. We've just been here for around 8 months, 10 months. But yeah, we've made our first 6 investments in the last 3 months. And 2026, we have plans to go more aggressive.
6 months and 6 investments, or 8 months and 6 investments is quite a good pace.
Thank you. Good morning, all. And Hyderabad Angels is there from 2010 onwards. We are almost 15 years old in the ecosystem and one of the earliest prominent angel network in India. We have invested almost near to 100 companies over a period of 15 years, tracking around 6 to 8 investments in a year actually. And the philosophy on the 3 things, one is business connects for startups at early stage, mentorship and money. That's a clear thing, and we look at companies which wanted to increase their prominence in Hyderabad is always been our forte. If somebody from Delhi, somebody from Bangalore, somebody from Vizag wanted to expand their base in Hyderabad and they feel Hyderabad Angels is a good bet and we feel we can bring the required connect, we go and invest in them. That's a philosophy and continue to do though. And around 2 years back, we set up our AIF fund because one of the key thing prompted us is the fund requirement at early stage, which a 1 and a 2 crores aspiration has no more become an aspiration for many startups. We observed the fund requirement at early stage went to $1 million today to be really meaningful success. That's the reason we have to set up a fund. And fund is investing average $500,000 and angels are co-investing with them. So it is becoming a meaningful check size to really serve the startup and listen to us and build their business network in Hyderabad. Thank you.
Thank you, Kiran, for, I'm happy to sit with all the, venture fund from Bombay and then, of course, Rathnakar Garu. So I speak as the TiE Vizag Vice President. Our goal is to create a fund, angel network out of Vizag. So it's nice to hear your ideas and, happy to share this stage with you. So I've run several companies and been an angel investor for a long time, close to 20 years now. But Hoshira Capital again is a young company. We are about a year old. But the idea for Hoshira was more than just a startup venture fund. Basically, like Rathnakar said, I think these days the check sizes are larger and also a lot of companies, startups are able to raise money, but they're struggling at the next level. And where Hoshira comes in is to help them from that level to either an exit or a growth strategy, right? So we want to provide mentorship. I would like to say post-venture, but since I'm in a venture capital forum, I'll keep it at that. So that's the idea of Hoshira Capital.
I think it's a great team because we have people starting all the way from angels to some of us coming in the early growth stage to you coming in the late growth stage. So through the entire sequence of a startup's journey, you can find the funding over here. So
Before going, Kiran, you are running Dallas Venture Capital Fund. You have to give introduction actually.
Yeah, we can't forget Kiran's accomplishments here. So yeah.
Usually the moderator doesn't have that option, but Dallas Venture Capital is a cross-border VC. We have got funds both in US and India. We have about 40 odd investments across 3 funds, but primarily focused on enterprise technology products. We are moving, as Naveen was speaking and presenting, I was just ticking off as to how many of those boxes do we have investments, both in India and globally. Fairly happy that we have ticked off about 4 or 5 boxes, Naveen, but it's also a good opportunity that we have another 6 or 7 boxes to tick. And I was very interesting that Naveen set the segue on this thing, particularly as we are looking at companies in the AI space, we are looking at the entire stack and also the AI governance, AI, the guardrails, AI observability. Today we have some investments and some of them we are looking at that. But again, coming back to my previous, the data that I was looking at, today hardly about 1% of the deep tech AI investment is happening in India. Okay. Do you see India following, and this is a question to all the three panelists because each one of you represent a different sector and sort of invest at different stage. Do you see India quickly adopting the global strategy and probably in a year or two, probably about 50% or 60% of our investments going into the deep tech AI space? Or because of the unique nature of India, you would still see space for consumer and other sectors, and India will have its own different basket compared to the global VC investment basket?
I think it will go both the ways, but since India is a mass market, so consumer tech would always be at the priority from a business standpoint, from a validity standpoint. Deep tech, the climate tech, the other sectors that we are seeing, they would take a little time to get matured. As we have seen, the whole VC ecosystem is still evolving and getting matured. So it's going to go both ways. But yeah, consumer tech, I believe, would remain always a priority, and India would have its own path.
Thank you. I think last decade and a half, more of consumer convenience and comfort has been the key factor for India, how they can help consumers and other people to connect and see that the comfort, convenience and premiumness is brought into the system. And one thing we always felt India is lacking from investment point of view is, does investors are looking for long-term patient capital. Other day we were only discussing deep tech definition under startup. They increased from 10 years to 20 years. And some of our angels said, Rathnakar, abhi mein invest kiya to whether my son will see the real returns for that startup actually. So India is still not mature to that extent in terms of investing in deep tech. And second is innovation efficiency, because most of the deep tech startups has to compete globally. India is not a major consumer, you know, Kiran. They are not the major consumer. We have seen consumption is growing, but not large. Whatever the AI stacks we have seen, deep tech stacks we have seen, the capacity we have seen is around 30 to 40 crores. We don't know whether it will become a 100 to 1,000 crores in India. That's still a long way to go. We felt that innovation competing globally with Koreans of the world, Chinese of the world, US of the world, Europe of the world, that has to go a long way. But definitely there is an opportunity, and we are telling our investors in their portfolio of 10 startups, if you can keep 2 startups for this, for long horizon, it is a very good objective, because if they are looking immediately for quick exits, it is difficult, very, very difficult, because it has to be proven, they have to fight the patents and get it done. But we are requesting, and we are seeing some traction coming from our angels, especially in deep tech. AI, I think total confusion is there, because the cycle has came down less than 2 years. At one time, the stack was 4 to 5 years range for them to reach to a certain level.
Supernovas which become 100 million in a year. Now everybody seems to be measuring your investments against that. Are you going to get to 100 million in a year? Which I don't know how possible it is for everybody to get there.
But Kiran, what I observed in US, you have to tell, some of them who got into AI stack quick adoption, the first year they reached $5 to $8 million of revenue. Next year they went to $25 million of revenue. Whereas India, I'm not seeing that kind of growth in AI tech. We were only seeing is that by the time they reach, something is coming back and they have to rechange the entire module per se. That has worried angels to some extent. Maybe VCs are good for that, but angels are still worried how the technology stack is changing, whether my money is good or bad, with the execution capability coming back to India. Thank you.
Yes, I'm going to say that India is always going to be a mixed bag, because we are not consumers of, like you said, we don't consume it as much. And I think the need in India is very diverse as compared to, other Western world or the developed economies. So I think it should remain a mixed bag. And but given the current political scenarios and Indian diaspora probably coming back into India, I feel like the tech investments will increase because, most of our investments or, you know, Dallas Ventures itself has a lot of tech investments, I guess. So it should remain a mixed bag, but at the same time, I do see an increase in the deep tech investments as we move forward.
Thanks, Madhavi, and Rathnakar. I'll also answer part of the question that you raised. Yeah, today we see, since we have the benefit of seeing how things are being adopted in the US and the traction, we see a lot more traction for the AI startups in our portfolio in the US because companies' ability to experiment and enterprises' ability to work with startups and try out new products is much higher over there. Second, the enterprise capability of the companies. Now, everybody wants to use AI, but all of them are not ready. Their data stacks are not ready to use AI and deploy AI in their models. And that's where we are seeing this significant growth of AI services startups. People are asking us to, hey, I know I want to deploy AI in my company. It's a board imperative, but I don't know what exactly can I do. Can you help build or can you help turn some of our native software products into AI-ready software products? This is a bigger question and bigger opportunity which is also emerging.
Yeah, I think that's a big business that is emerging. Coming from a consulting background, we do see a lot of customers asking us that question. And we, as any consulting company, we start training folks and so I do see that as an opportunity to.
Yeah, and as VCs also earlier, we were not so much looking at services because of the low multiples. But this is an area we are looking at. But again, I was also reading up the definition of smart capital when I was asked to lead this panel. And the definition of smart capital is that capital which not just provides the financial assistance, but also uses that and helps the companies through that assistance to grow and scale. Now, without having customers in India, and that's a question that, Chirag, that I would like to pose to you. Do you believe that Indian startups building for India will have an edge and faster growth compared to Indian startups building for the world and the globe? Or do you see that Indian startups have to start preparing for, or while at the design stage itself, they'll have to plan for a global product?
So I think it will definitely be both. Indian startups would start in India and then they would take a global approach as well. The moment they see that they've matured in India or they are entered into a growth stage in India, that's where they'll think about expanding. You talk about Urban Clap, which is now an urban company. Once it got matured, they started entering into UAE. You talk about Healthians. Healthians are at a growth stage in India at today's point of time, and now they are entering UAE market. So it's going to be both the ways, and the startups will have to build it because, again, there is a lot of chaos at an early stage startup because there's a high burn startup. So somewhere you will, at a stage, you will have to earn, you will have to show that profitability, and if you're stepping out of India, I think that's where you're trying to balance out your unit economics.
So do you suggest a calibrated approach saying that, hey, first work on, let's say, the Southeast Asias and the Middle East of the world before going to the developed markets? Because the burn in developed markets is extremely high. So have you seen a pattern or have you, within your portfolio, as to what succeeds and what doesn't?
So again, that would depend from a startup to startup. Now, let's say if there is a sports tech startup who is focusing on football, right? Rather than expanding themselves into Southeast Asia, they might want to go to a Europe or a US, no matter, even the burn is high. So I think the geography, the expansion of the geography would be dependent on the business model. Like Urban Club was a service model. Dubai is the best example for it, the best hub for it. So it has to be aligned with the business model, and obviously then you have your fundamental research that you do, that what's your TG, where is this problem that can be solved. So you go back to your drawing book and a blank slate. So in short, it has to be calibrated with the business model. The geographies will have to be calibrated with the business model.
Interesting. My question to Rathnakar is, you also been investing in a lot of consumer brands over the last 10, 12 years. Do you see any of these brands becoming global brands? Now, technology we all understand. Faster, better, cheaper, efficient, and a lot of talent pool. But do you see some of the Indian consumer brands becoming global brands? Any examples that you can think of?
I seen very, very few in Indian consumer brand because a lot of VCs in consumer ecosystem. You look into e-commerce, fintech, logistic tech, whatever we are seeing. This India itself is a vast market for them, and they are not even touched even 1% of the population. If you look into the Byju's of the world, they touched 80 lakhs population, they become a 22 billion unicorn. Just giving an example, which is there. And Zomato today only servicing around 150 to 160 pin codes in India today, and they become $30 billion unicorn for us and one of the fastest growing. So on consumer side, most of the VCs are saying, don't worry about going outside. Spend in India, grow in India, market is very large. Even InsurTech, they also did the same thing. The insurance is a largely wide market, adoption is going much, much high. But as I said, deep tech and AI, India's still adoption is very low. They are expected to go global and they have to fight with the global ecosystem, not with the local ecosystem. And we found there are challenges. As I said, the burn is high. The acceptance of other countries by the Indian products. In US, it has been much adoptive, but in Europe or Germany or in UAE, still they are adopting to the Western world, not to the Indian world, which I have seen. But most of the Indians are still trying. And Indians I observed in Dubai are the best trade masters. They buy products and sell it to African region. They buy the products and sell it to this thing. I have not seen on the tech side or a deep tech side, they did extremely good job per se, actually.
Very interesting. And Madhavi, you have worked on core technology, particularly in the telecom area, in the manufacturing area. How do you see investments in that sector shaping up?
Okay, so we've been looking at a lot of sustainable manufacturing, like batteries and solar, those kind of investments come up, and I'm actually surprised at how many of those companies come to us on almost a daily basis. Battery has been a very favorite, and solar has been a favorite startup for a lot of, at least the Hyderabad folks that we meet and talk. I see a huge investment in the whole solar, battery run carts and or those we see a lot, and I also see a need for it. So the adaptability in India is very high on that. So I think that's the next big wave. You'll start seeing, like if you go to Jaipur and Delhi, you see a lot of solar run autos and auto rickshaws, and also I think that will start to adopt in the rest of India. So that's where I see a large amount of investment in the VC and the above.
So within the manufacturing sector, currently you are seeing a significant traction and force behind battery and solar. Any
And
other
automobile.
in automobile? But what about core sectors, like particularly, let's say, in the area of telecom equipment, defense equipment?
Defense again is a huge, we don't, I don't really, dwell in that, but it's again a huge field, we see a lot of startups. In fact, we are actually helping one company based out of Hyderabad make investments in defense tech, in drone based, and their company actually was involved with the Operation Sindoor, so that was an investment they did. But yeah, I think drone technology is another area in the defense
I
tech.
think today drones are used to bomb. Now Iran is showing and India also showing the Sindoor actually.
But last heard, I think there are about 700 drone startups in India.
Correct.
That was
More than that actually.
More than that. But thanks, Madhavi. I think that gives us a few insights into the sort of sectors, particularly in the manufacturing area. We'll also come into the other core infrastructure sectors a little later. But Rathnakar, you have managed investments both from angel networks and also from the fund. Do you see a difference in the way funds are thinking about the next set of investments, and how individual angel investors are thinking about the next set of investments in the future?
Not to put on a negative thought, what I seen, just to give an example, 2020-21, lot of people spoke about e-commerce and edtech. So all the investors moved in that direction. And if you look back, most of them failed. Again, 2022, there was a lot of discussion on DTC brand. INC42, your stories, papers have discussed, consumer is a big brand. So angels went with the current trend. Again, if you now look back after 2 years, DTCs are grown at a decent pace, but they have not done extremely well. Who has done well? Somebody like Mamaearth and Nykaa, which started way back, they got into the momentum, they did well. Currently, I'm seeing a lot of discussion is on deep tech and AI. So some companies which came in 2019, example, Hyderabad Angels have seen Dhruva Space. They said satellites will not do well. Suddenly it went up. We have seen Digantara. They said it will not do well. We seen Agnikul. They said it will not do well.
So it's about sentiment. But
See, I see angels are moving based on the current market discussion, which has been poured in their minds through media. This is where. They're just jumping. If you look 3 years down the line, I don't know whether the sector will really put a
so
lot of money.
today, if somebody comes with an edtech idea, would you look at it? Would you present it to your investors?
Still, yes. There is a change in philosophy, change in outlook, because there is a change in transition. We are saying, look at 5 years down the lane. A lot of people are not still looking at semiconductor as an industry, right? There are good number of investments are happening, but our people are shying away. I'm saying from Hyderabad, it is not generally VHR. Again, we are looking at some of the quantum computing aspect. They said quantum will not work, let us not look at him actually. Because the entire VC world is discussing, next 5 years, this is the biggest wave which is going to come, semiconductor, quantum computing of the world. And we are also seeing a lot of space tech companies coming in, but we felt they already crossed that 7 to 8 years lifespan. Some of them have started a long time, they are seeing the benefit. Somebody is starting right now, it is a big challenge for them to grow. But
so
we
you
are
are saying
seeing
it's patient capital and
Correct.
people who have the sustenance power, particularly in these sectors and the early rising sectors, if they can stay on for 7 or 8 years, that's probably when they will realize that.
No,
there's
Kiran,
benefit.
what we observed to tell you is, for example, we are looking at eVault, that vertical takeoff. A lot of people need to understand a particular product to get commercialized at this level, it will take $100 million to $120 million. If a semiconductor has to pull out, really coming back, getting into the commercial manufacturing, getting the customer acceptance, again it is a $70 to $80 million opportunity. Until unless he raises that kind of funds, it is very difficult to bring them back. Whereas in consumer space, a 2 crores can give a 20 crores revenue. So I asked angels, do you want to really invest? If somebody is coming in saying, I want to raise $1 million to do a deep tech, is it ready to do that? Correct. And in AI also what we observed is, at least 3 years back we are saying any company who is doing an AI stack, they have to raise $2 million because the cost of engineer went up, my rent cost has went up, his sales cost has went up, and the product GPUs have gone up. But some of our members went and invested, somebody asked 2 crores, let me try. Whether it will really work. So we are asking our members, financially be vigilant, what kind of money is needed for them to be successful and how they have to be backed. That's a
So
point
they
which
need
we
to
are
be
taking.
aware of the type of investment that they are getting in, and also for all the investors, particularly Shreya talked about getting lot more angel investors from Vizag. They need to be treating it as a separate asset class. There will be certain investments which will generate quick returns, but there will be a lot of investments where you will have to stay patient and probably take it as, invest it as a generational wealth. And yeah, maybe as you said, what you invest today will be good only for your next generation.
No, Kiran, I always say don't treat angel investment as an asset class. It is an aspirational investment for future of the country. Somebody will succeed and make money, it is your success and his success. If you treat it as asset class, you are the first person to burn your heart. Correct? In startup, one thing will come quickly. The closure will come quickly than the success. I always quote our Bhagavatam, where they use snake to pull. The first one is poison will come, the last one is Amritam will
So
come.
the next budget we should ask for ATG benefits. So shifting Moving a little, shifting tracks a bit, Chirag. More for the investors and some of the entrepreneurs, more for the entrepreneurs in the room. I would like to understand a bit about the investment decision points and styles that you go at various stages. Okay, and also we'll talk about a little bit about exit probabilities. How do you decide is the right moment to invest, particularly between when, how do you decide if the product market fit has been found and they're ready to scale, and what milestones defines that they're investment ready?
So we predominantly deal into a very early stages. Our ticket size has been as low as 15 lakhs and it has gone up to 75 lakhs as well.
Okay.
And we play in that exact range where the founders struggle to raise the money from VC. Okay. And that's where I want to be. Coming back to your question, when you're at that stage, obviously you cannot expect a traction or anything. One thing that is expected is a clarity. As a founder, how clear you are on your next 12 months roadmap. And I'll give you a perfect example. There are these two boys from Kochi, Parki, we just invested 20 lakhs. They had just built a product, that's it. But when we talk to them, they have a clear GTM execution plan in place. And whatever you're talking to them, in a week's time, you see the execution. Right, because at the early stage, you don't have more numbers, you don't have math, you don't have economics. You have to bet on a founder, and founder has to have a clarity. On the other hand, I came across a founder who was trying to raise something around 1.5 CR and was building into a carbon control. And they're like, okay, I'm gonna be giving a carbon credits. Okay, I'm saying it in a very layman's term. And I said, okay, what is the value proposition that you're gonna provide? How you gonna provide? He's like, I'm going to figure that out after I raise the fund. I want someone to back on me. So that's the clear differentiation. Both are at a similar stage, okay, but the clarity that you have is phenomenal. So that clarity and conviction.
So execution, clarity and conviction is most important.
Yes.
Now coming to the other end, it's also been a conundrum, Madhavi, for us, particularly when founders come in and start talking about exit, you don't want to invest in them. If founders don't talk about exit, you don't want to invest in them.
So actually, I was going to say, sorry to jump in before even you ask the question. For us, it's the exact opposite. We want to mentor and fund the founders who reached a certain point and they're completely confused about what they want to do next. And I think those are, you know, it's like rewinding our life about 20 years ago, and then, you know, you have somebody to mentor. So it's just, this is like, you know, at least we thrive in those kind of situations. It's basically companies that have come to a stage and you know, they have profits, they have a good product, but they struggle, you know, to either expand globally, because a lot of them, that's the next step. And it's, like Rathnakar said, it's very expensive to expand globally. Or, you know, what do they do next, right? So those are the companies we work with. And a lot of times, you know, talking to them, they get a lot of clarity on what they want to do next. And some of them do, you know, then we discuss the exit strategy, right? Growth, IPO, M&A, whatever, you know. So those are the kind of people we want, that little bit of push, both from a mentoring standpoint as well as a capital standpoint. That's
yeah, I think even in our experience, convincing a founder that, look, you need to sell your company and move on and let go is usually a 6 months to a year's process. And convincing the other investors also and getting them on board, it takes a year's process before you even get them to do that.
Yeah, that's, you know, like I said, I wish somebody told me that 20 years ago. I would have scripted a different story for myself. So anyway, that's where we play. Yeah.
Okay, now shifting tracks again and talking about sectors of late, particularly in the last 2 years with the announcement of RDIF fund. We see every fund now talking only about deep tech. They are either raising only deep tech funds or recalibrating their investment strategy to deep tech aspects. My question to Rathnakar is, do we have enough expertise in
this country. And let's take, for example, just the AI data stack that Naveen presented and the 5 models. As of now, we see a lot of startups coming in vertical applications, a few in horizontal applications, particularly in India, very few on the infra layer. Forget about compute and hardware layer. Yes, there is a lot of opportunity, but the sort of traction, some of the areas, particularly in the areas of AI observability or AI security that we are seeing in the US, we are not seeing over here. Okay. Do we even have that sort of expertise within our country to make the right investment choices and also to help these companies grow and scale once we invest?
Before I go, one point, Madhavi and other people, we looked in Hyderabad Angels whether M&A is a good strategy or IPO is a good strategy. If the founder comes and says, I want to get acquired, we don't invest in them. The reason is, I don't have a team in IB who can work for their exit. And naturally, our success has been very, very low. But somebody says IPO is the criteria, scale is the criteria. In the process of their growth, they're getting acquired is an opportunity we wanted to get in. We have seen huge successes just because none of them as an angel has an experience to somebody to carry it and do an exit for them. So if some founder comes and says, I am going to get acquired, and I am going to grow, this is an exit opportunity, I request you to have it because that is a game of certain VCs, they understand, they invest in that vertical and take it forward. Just giving a point. Coming back, Kiran Garu, on RDA fund, I felt most of the angels in India, including the family offices in India, whether you negate or not, a lot of people are claiming will come early stage. Most of them are looking to how to protect the principal and they are coming at Series A, Series B or a pre-IPO stage. And these deep tech startups are not getting required funding because the question of whether we have the talent or not is always there. But when you go to IIT Madras, IIT Delhi, Kanpur, IISc, some of the lots, the kind of people they have and professors himself are driving the deep tech, and you ask any of them, these people can't sustain in the global economy. That is a common perception among all the people actually. And they want somebody who is specialized, like Bharat Innovation Fund, Specially Invest. Some of them got very early in the deep tech, said, we will carry it forward. Okay, you don't have convention, let me get the convention forward, which we observed. But still not large way. I felt government taking an initiative and Piyush Goyal remark, I still remember Startup Mahmood, he has been a lot of push. His remark has changed the mindset of the people through media, discussing about deep tech. Now they understand competing to the world. I think world is changing because of Trump. Everybody is looking, I have to build for my own country, correct? That has been changed a lot. And this 1 lakh crores fund coming to forward to experiment by the government, I feel that is the biggest boon for many of the enterprises who want to start deep tech, real deep tech. I always said deep tech is what, I have spoken to an OpenAI engineer around 3 months back. Rathnakar, we were looking at Google, when Google came in for search engine, it is like a lake. Then we were looking at the river. Then we thought, okay, lake and river we are saying we want entire ocean, but we want to know at what location what is happening and both structured. And we went and built a search engine called LLM by all of them, Perplexity and everybody. The person who changed the mindset is Anthropic, you all heard. They went deep into the water, they're pulling out the pearls one after the other. We can do one and other. It is questioning us what we have to do. But that complete change. But we are seeing India definitely have that opportunity. Innovation by the professors, teachers, parents, and angels started encouraging because of this mindset change brought in by our PM Modi. And it is a good, he said, as a government, I am putting my fund, let all follow.
No, so fair enough. You talked about 5 or 6 institutes, and today we also go to the same IIT Madras or IISc or IIT Kanpur. But hardly together their output in a year is not more than a few hundred PhDs and a few thousand undergraduate, graduate students. That said, even within the investment community, are there enough people who can distinguish between a wrapper around this thing or deep domain expert? Today, I think I'm fairly fatigued listening to the number of voice AI companies which are coming in, the the companies in the hiring sector. I feel sorry for the pure recruitment folks, but everybody seems to be after their job. But there are so many of them without a differentiating factor or no deep tech differentiation. So is there one enough capability to build those type of products, or is there enough capability even to evaluate, understand and invest those type of products? And how can we partner with academia? Now we are sitting in the midst of a very august institution. How can we partner with academia to build this capability?
So, Kiran, you know, India is built on copy and paste model initially. It is a copy and paste. Then we go, after seeing the success, we go deep into the scenario. Today, most of them are coming with wrapper because it is an easy entry point. I see many startup founders wanted to see the entry barriers are less and they wanted to push themselves inside. That's the reason the wrapper came into the picture. But if the entry barriers are larger, it is very difficult to go forward. And the institutions which are coming in, they are not investing. If you look into the R&D budget of many colleges, they don't have any R&D budget really to go and invest. Whereas IITs, even IIT Tirupati has been poured with a lot of money. They don't have a required professor or a PhD who can invest that money and build a real product outcome. So we are requesting many institutions to push some money towards R&D and grow it to the next level. Then we will see a larger opportunity today. Otherwise, it is very difficult. That is the reason still we are searching at IITs of old IITs who has large budgets. Professors has been pushed for research. They have been pushed for patents. That has been our forte. And to say you frankly, as per the records, 2025 FAGN, there are 73 angel VC funds in India who are writing first checks. IHA is not writing first check, what I'm saying. There are 70. I said this is a wonderful opportunity people have to identify.
Yeah, I stand guilty because I am not also among the 73 people. But yeah, Madhavi, you have a point.
I just want to say, I think we need to look beyond the IITs and the even.
No, you have to ask how, here so many members are there. I also asked TiE members, how many in their organizations they are putting an R&D budget which is equivalent to 2 or 5% of the total top line
I think
or
we
a
are-
profit.
Yeah, we are all
No, they
guilty of
claim if you go into the balance sheet and if any auditor reviews, you will not find it.
Kalyan, you should answer this.
With again, with such a distinguished panel, I'm sure we have lot to discuss and we can go on and on, but interest of time, I would also like to take a few questions from the audience if they have anything for the panelists. Just if you have questions, just introduce yourself, your question, very specific question to the specific panelist.
I don't have a question, but I have a request. We have 4 of you here. I don't know how many of is this first time in Vizag. My only request is in the next 12 months, you please understand the ecosystem, you connect with some good startups, and this responsibility Madhavi is going to take because she's the VP as well as an angel investor, plus connecting with Ravi. My request is, out of this 4, we need 3 investments in the next 12 months.
No, we would be happy, Kalyan. We would be more than happy and we would be happy to nurture. The very reason why we made this trip all the way is to see if there is any possibility of any investments. We are also always on the search for investments and, we are as much under pressure to deploy capital as much as the startups are to raise money.
I'm not asking you to take an oath, but I would like you to try.
But Kalyan garu, only Geetams is calling us for startup events in Vizag. I have not seen any college call, and one time an EO event happened in Vizag calling. This is the first time I'm coming for TiE event for startups.
So we are going to change that actually. Ravi, I'm going to...
AHUB, I have been to AHUB some years back.
Yeah. So yes, request when along with that, we should also give you a pipeline. Otherwise, no point you coming here and doing something this thing. So please don't fly back today after the dinner or tomorrow morning. Please stay. Because the startup that we have curated for you, I'm sure there is something that is interesting out of that. Vizag has come out, it's just budding. And there is, because I myself have invested in a few, because that's why I'm not involved in that, because for confidentiality and non-conflict stuff.
We both know each other. We were working in KLU, SRM.
Yes, a lot of colleges we were all there together.
I'm coming to Andhra very frequently.
Yeah, he's been very helpful to the Andhra ecosystem. Thanks, and yeah.
I wanted to say that
good afternoon, one and all. I thank TiECON Vizag for organizing this kind of event, because for the last 1 year I have been visiting IIT Delhi and all the incubation centers. So I have been searching when in Telangana and Andhra I would like to see this kind of environment. So I thank. Sir, coming back to the point, if you go over a decade ago, there were only few AFs and SEBI Cat 1, 2, 3 and VC and investment ecosystem in India. So there is a sharp rise in such kind of instruments and values. Can I know what reason has took for sharp rise in this Indian economy and investment ecosystem and rise and fall of the startups in a one-line summary? And second thing, my name is Anil Kumar. I am coming from Karimnagar for this event. So as an investment banker, I possess closely 10 to 20 early to growth stage companies. Apart from focusing on traditional CA practice, I was focused to help the startup entrepreneurs. So different companies are available at our office. So different unique companies we have onboarded. And I thank TiECON Vizag once again for arranging these events. And I would like for every quarter, if you can arrange, we can create a good economy. And I will be the first person contributing. Thank you.
Thank you. So your question on growth in AIF, startup investments have been matured, death rate came down. Today, the 1% death was successful, went to 20%. How many are really making money is a different story. And what AIFs have seen, Kiran Garu also made a comment, it has become an asset class. We are all running a fund saying that we'll give certain returns. Today with authority, with market coming for exits, market coming for growth, you're seeing in stock market, FIS has been overtaken by DIS, right? Most of the time DIS are largest buyers in the stock market. We are seeing the momentum has come, right inflection point. Doing that 12 to 15% IRR, I think it has been very, very positive. The success has been much higher and that has given confidence for many of them to come to the startup in AIF. But as an angel, it is your passion for investment in future. It is not a return. If somebody is coming saying that I am an asset class to make returns, forget unless you do 50 odd investments, you will not see any returns in that. Kiran, anything from your side?
Again, we are available for discussion post this, but I would just close it with one comment. It's a virtuous cycle, okay? And my request also to the larger investment community like you, the chartered accountants, is to educate your clients about this particular type of investment, both the good and bad of this. Now, a lot of times we have been thinking about why is Bangalore so ahead? And being in Hyderabad, we are still trying to catch up and we are significantly lagging. The reason is we do not have an active investor base also in Hyderabad in this particular asset class. Now, again, you will get those investor bases, but if there are successful startups, and once successful startups are there, a lot of people will start investing and that will sort of become a virtuous cycle. So we'll take it in the interest, again, I think. Great. Yeah. So TiE also should facilitate and probably a few educating sessions for people over here to invest in this particular type of. I would still say, stick with asset class because I don't have a better word right now. Thank you. Thank you.
Thank you all. And Kiran Garu, that was very well moderated. And for Chirag, Rathnakar and Madhavi, thank you for joining us. I think so many things that you've said. One standout is the opportunity here. I think Ravi Garu also mentioned that there's going to be a pipeline and we want you guys to keep coming. TiE is here and there are going to be many other things that we can collaborate. So with this very positive note, we can break for lunch. And the next session, the next panel discussion moderated by Naveen Garu will start at 2:30. So that's a half an hour delay. And 2:30 we are all going to be here and that's one of the most interesting panel discussions. So I would implore everybody to be here sharp at 2:30. And Kalyan Garu will be presenting tokens of appreciation.